you're an options trader who is focused on income, I guarantee you're making this big mistake if you're trading the wheel strategy. Almost everyone's doing it. I don't hear people talking about this. And today I'm going to tell you how to make better decisions with a system to generate more income with the wheel strategy. If you're not familiar with the wheel strategy, just really quickly, you can see on the screen the little circle going around. Your first option is to sell a put. When you sell a put, you're just obligating yourself to buy 100 shares at the strike of the put that you sold. So let's just say you sell 100 strike put, you're obligating yourself to buy shares of that company at 100. If the stock drops to 95, right, you're going to get the shares at 100, get assigned, right? You'll start selling cover calls, hopefully at like 105. You want to get called away for higher than you got put, ideally. There's different ways to manage those puts if the stock goes lower. But for the sake of this example, we're just going to talk about the wheel. You get called away and then you start selling puts again. You put the shares, you start selling cover calls, and you get called away again. Now, what is the problem with the wheel strategy? The wheel strategy works fine. I know a lot of people say it's boring. A lot of people say you can't make money doing it. I make money all the time using the wheel strategy, and it's not failing because it's a bad strategy. It's failing because people start at the wrong place. You know, when you're going to a tire shop and you're getting new tires on your car, the salesman's going to say, hey, would you like to buy roadside hazard insurance on these tires? If something happens, we'll replace them. Now, a lot of people say no to that, but you know, stock options are nothing but insurance policies, right? So if you build a system where you decide, hey, instead of selling a naked put or a cash secured put, I'm going to sell a put spread. I'm going to buy some insurance. The reason I'm bringing this up is I'm going to talk about an example today with you with stock GLW. It's Corningware. I was wrong on the direction. I was wrong on the timing. I was wrong on the strikes. I still made $2,445 trading the very first leg of a put spread on the wheel strategy for this stock. Now, if you don't believe me, let's just hop over to the Good Kids Trading Discord. I'm going to show you exactly. I post all my trades real time for my Inner Circle members, so you could see these trades in real time. You're going to see this one was a really nice winner, and I went through exactly the steps that I took real time. So sold the 160, bought the 155. I collected $210, which is well over my 1% minimum for that 160 strike. So I'm agreeing to buy those shares at 160. That 155 long put that I bought, so I reduced my premium a little bit, it gave me the roadside insurance. And you might be saying, Justin, why did you buy insurance and not just sell a naked put to enter the wheel? And this is the biggest mistake most people make. The red line and the blue line on all of my charts is the 200 and 100 simple moving averages. That means this is the last 100 candles averaged out for the price. So right here, the last 100 candles, the last 100 trading days for Corningware, the stock averages out to 160. It was trading at $255. This is on June 30th. If we look at that and we use the measuring tool here, we're 36%, almost 40% away from the last 100, and almost, a little bit over 50%. So we're double the last 200 candles. This is a perfect time to buy some insurance on your wheels. Like if the stock was a little bit lower, let's say we're closer to the blue line, that might make a little bit more sense of when you should not have to buy the insurance. But we're going to keep going because I didn't get into this trade until a little bit later on. So I got into this trade on the 15th. So let's go forward just a little bit. I don't know if you guys use TradingView. I really love TradingView, and you can kind of go forward, give it a try, and start seeing how things go. So the very next day, we kind of get a little bit of a bearish candle. I like to sell puts on down days. I don't know about you, but I have an actual checklist of when I decide to sell my puts. And if you want my checklist, it's totally free. You can head over to mrmoneymaxwealth.com/kit. Just type in your email and your first name. I'm giving you my exact checklist and how I manage all of my put sales. So you can do the same system that I do. I like to buy stocks off the blue line and the red line, right? That's a good average price for me to where I can start buying the stock. So we're going to come on down. This stock hits the blue line. Okay, and that means that the stock went from 271 all the way down to 160. And I'm waiting for it. I don't mind being a little bit patient on this one. I'm gonna wait for the stock to come to me. July 15th, right? Let's hop over to my Discord. You're gonna see I entered this trade on July 15th. Was that a coincidence? No, I'm waiting for the stock to come to me. And when it does, instead of just selling a naked put, I'm gonna go ahead and buy that insurance. So instead of collecting like $400, I only collected $200. And you're thinking to yourself, why would you do that? I'm always paying attention to when earnings are. So you can see here, earnings were on July 28th, which happens to be the next time that I make a trade on this particular wheel strategy. If you went out here and you sold this 130 put and said, I don't mind owning some shares of Corningware off the off the 200 simple moving average, that might work out for you. But look how you're starting to lose. You're losing. Okay, it's starting to recover a little bit, up another down day. So if you only have that naked put, that cash secured put, naked put, however you want to call it, and you don't have those road hazard insurance, you're getting a little bit nervous. What if Corningware comes down? Now, I had the road hazard insurance, so personally, I'm hoping that I get a blowout on the interstate because I'm going to cash in on my insurance policy. Now, I'm waiting for earnings before I make any move. Traded below the 200. So if you had that cash secured naked put, you're losing here. You're losing pretty badly. Now, you and I, we knew that the stock was extended. It was 50% over at one time. So today, this day right here, I cashed in that insurance policy. So that long put that I had, I sold it for $3,995. That was a credit that hit my account. Now, I'm still obligated to own shares of Corning at 160, right? So I had the 160, 155. So I'm still having to own the shares here, but I have almost a $40 credit. Show you that I'm not making all this up. So 28th, I'm going to unravel this at open, right? Meaning I'm going to sell the long put. You can see here, I got a $3,995 credit. Worked out really well. Some of the people were saying, hey, how did you do this? August 5th, I went ahead and bought back that put and I paid $11.50. So the total profit of this trade was $2,445. And I'll just tell you right now, I went ahead and hopped right back in to another spread on Corningware for 130, 120 put a little bit later on. Corning goes ahead and starts recovering, right? So it regained the 200. So if you had sold the 200, you would have probably been okay, but the most you would have ever collected on that was the $400 that you sold with the put. Since we had that insurance policy, we made an extra $4,000 just from that. Now you can say, why didn't you go ahead and keep your short put? Like the stock seems like it's recovering. Great question. I would much rather own it down here, right? So I've obligated myself to rebuy it down here, got paid another $200. If Corning does something like this, right, I'm going to come right here and I'm going to unravel this for another $2,000, $3,000. And I'm going to really be happy. If Corning keeps going up like this, I'm just going to keep my $200, right? I'm going to keep the $200 from the wheel. I'll wait till I get puts again, and I'm just going to keep this wheel going over and over. A lot of people make the mistake of entering a wheel strategy at all-time highs. If you want to make some extra income, consider selling spreads instead of just selling naked puts to get into stocks, especially when they're extended 50, 40% off of the 100 and 200 moving average. If you want your charts to look just like mine, check out the link in the description below. I'm going to show you for free how I set up my charts in TradingView. And if you want my checklist of exactly how I sell puts in the stock market, head over to mrmoneymaxwell.com/kit. I'm giving you my exact strategy on how I sell puts, how I manage them. This is how I create passive income in the stock market, and it's how I replaced my paycheck. I'm not a financial advisor. This is educational information only, but I've been doing this for 20 years. It's working well for me, and I know it can work well for you. I'll see you next time right here.